Hi, and welcome back to the Business Career College video series. In this video, we are going to have a look at a concept that causes some students some difficulty, and this is the coordination of benefits. Now, there are a lot of sort of other issues with coordination of benefits before we get into the heart of the matter. First off, just the idea of coordination of benefits. First off, this happens anytime we have more than one coverage that might apply to a particular situation. So we don't typically have any coordination of benefits with life insurance, but with disability insurance, for example, coordination of benefits is a concern. And with disability insurance, generally, we go in the order of payor. So for the most part, Canada Pension Plan would be first payor against any other benefit, and then Canada Pension Plan, after Canada Pension Plan, sorry, comes WCB. So WCB in this case would look to Canada Pension Plan and would say, hey, if Canada Pension Plan is paying anything, then that reduces what we have to pay. And then typically we would graduate to EI. So you're not going to have EI and CPP disability benefits paid at the same time. The benefit period for EI is no more than 15 weeks after a 2-week elimination period. CPP doesn't start until the 4th month, so those two typically won't pay at the same time. But EI would look to WCB and say, hey, if you're getting WCB benefits, you don't need to worry about EI then. And then you could have an auto policy. Auto policies pay fairly limited benefits, but in some cases they do provide some disability benefits, typically up to 2 years for a fairly limited amount if you are a driver, passenger, or pedestrian in an auto accident. And then typically we look to your group disability benefits. So your group benefits would look to your auto benefits and say, oh, you're getting some auto benefits. Okay, we don't need to pay then. Or we would look to your WCB. We'd say, oh, okay, you're getting WCB. You don't need to worry about that. EI actually considers group to be first payor, so it's not a perfect picture this way, but generally group is looking to the other benefits. Just EI considers group to be first payor, and then you would have your individual disability benefits, which are generally the last payor. So this is coordination of benefits with disability insurance. It just shows that we're coordinating benefits. It means that these entities all have contractual provisions or program provisions that prevent you from collecting too much benefit at one time. There is no coordination of benefits with, for example, life insurance or CI, or with LTC. For the most part, that's true as well. We do have coordination of benefits, however, with health and dental. And this works a number of ways. For exam purposes, generally what you're going to be tested on here is a math concept. And this is where we get into the Canadian Life and Health Insurance Association's coordination of benefits guidelines. So the Canadian Life and Health Insurance Association has a COB guideline that they publish that tells insurance companies what happens when we have more than one payer that might have to pay benefits. Now, this is pretty obvious in most cases. So if we have a married couple here, we have Paul, and fix that there, sorry about that, Paul and Patty, and they have, we'll just give them one child here, Aaron, one child, and Paul has benefits through maybe an individual health and dental plan or maybe group. It doesn't really matter. And let's say he has a $25 deductible and 80% co-insurance. And Paul was born on the 20th of May of 1978. And Patty has a $60 deductible and 90% co-insurance. And she was born on the 15th of February of 1980. Okay, and they have a daughter here, Erin. Erin is 8 years old. Okay, if Paul goes to the dentist or whatever the service happens to be to get work done, Paul's plan will be first payor. If Patty goes to get work done, Patty's plan will be first payor. That probably doesn't bear explaining. The question that arises is, what if Erin goes? So let's say Erin goes to the dentist and gets a cleaning, and let's say that cleaning costs $340, and in this province the insurer says, okay, it's reasonable and customary, that is, there's a fee guide or some similar provision, and it says the reasonable and customary expense here for a cleaning for an 8-year-old child would be, let's go with $300. Okay, so now we have to figure out which plan is going to be first payor. So in this case, the first payor will be between Paul and Patty, a married couple or common law couple, the one that celebrates their birthday earlier in the year. That is, we don't care in what year they were born, that's never relevant. What we care about is who celebrates their birthday first. In this case, we can see that it's Patty. February comes before May. So Patty's insurance company is going to assume first payer status. If they both had the same birthday, then we would go to the first letter of the first name. So we would say, okay, that's $300, and Patty's insurance company applies a $60 deductible. That knocks us down to $240. We've got 90% co-insurance. Patty's insurer, in this case, will pay $216. Now, that means that what's out of pocket here, or what's not paid out of the eligible expense by Patty's insurer, is the $300 eligible minus the $216 they would pay. We can see then that is $84 that goes unpaid here. Okay, so that $84 amount is not paid by Patty's insurer. Let's clean that up a little bit for you there. Sorry, we want that to be perfectly clear. $84. Okay, so then we go to our secondary carrier, and in this case our secondary carrier is obviously going to be Paul's plan, and Paul's plan says, okay, the eligible expense is $300, and now we would take the deductible off. Paul's deductible, $25, brings us to $275 times 80%. That's going to be $220 that Paul's insurance company would pay. 80% of 275 is 220. So Paul's insurer says, okay, we would pay 220. Well, hang on a second here. If Paul's insurer pays 220 and Patty's insurer pays 216, $216 plus $220 is $436. That's more than the original amount that they paid at the dentist. So that doesn't make any sense. They're not going to do that. The actual coordination of benefits guidelines say they will pay the least of the difference that Patty's plan left unpaid, or the amount that Paul's plan would have paid anyways. In this case, we can see that Paul's plan would pay $84. It would not pay the $220 we see here. So the end result is that Patty's plan pays the $216 that we calculated, and Paul's plan pays the $84 that we calculated over here. There are other possible methods of calculating coordination of benefits. However, this is what you'll be expected to do for the purpose of the Life License Qualification Program exams. And this is what is laid out in the CLHIA Coordination of Benefits Guidelines. I hope that helps. Thanks very much, and please let me know if you have any questions.